Welcome to our webinar on Indiana farmland values and cash rents and the adjustments we see in those values. My name's Mike Boldre, and we're pleased to have you with us. I'm pleased to have here in the room Michael Langmeier, who is the Associate Director and Professor in the Center for Commercial Agriculture, and Craig Dobbins, who is a professor and extension economist here at Purdue University. So we're going to focus here primarily on work that has been done recently here in Indiana, but let me just make sure those of you in other states don't get the impression that this is simply going to be an Indiana conversation, because Michael, we're going to also share some of the information we've done on other states and try to draw implications relative to the Corn Belt. So we're going to be, Craig, Corn Belt focused in our conversation here. Yep. But it's not going to be uniquely specific to Indiana in terms of the conversation we're going to have. But at the same time, the most recent information that we have to share with you is the Indiana Farmland Value Survey and some of the work that's been done there. We always want your questions, and so if you email your questions to Michael Langmeier, and there's his email address, we'll be happy to respond to them as we either go through the session or at the end, depending upon when they come in. So let's get started and see what kind of new insights we have in terms of first this issue of land values. So Craig, we have a new survey that you have been doing for a year or two now. You've done quite a few years, right? And that's the Farmland Value Survey. And so why don't you at least start the conversation here on this, on the new results we've got from that survey.
Sure. So I thought a good place to begin would be to give folks a little background in how we do this survey. And so it's done each June. And I'm not sure how June got picked, but when I inherited this job, that's when it was. And so we've left it there. June is always an interesting time to do one of these sorts of surveys because there's usually something going on that's affecting the agricultural markets in June. So,
right.
But anyway.
Not this year, though.
No, right. It was really quiet.
Yeah, right. Really quiet. Whoa, prices going up and collapsing right in July.
So the way we do this, we survey people who are involved in the land market in terms of their professional activities. So rural appraisers, ag lenders, farm management people that are managing farms professionally, and farmers are involved in this survey. We ask them a series of questions. We ask them about land values in 3 periods of time, the preceding December, right now, so the June 16th, and then we ask them to put on their crystal or their forecasting hats or look at their crystal ball or however they do it to give us an estimate of what's going to happen in December of 16. And we ask them to give us a value for top, average, and poor quality land. And to get a bit of a measure of what the productivity of these qualities of land are, we ask them for the long-term corn yields, and so that's what we use to judge the productivity. And then we ask them a series of questions, same questions about cash rents.
And so this has been ongoing now for quite a while, which means that we kind of have, so sometimes maybe the trends are really of interest as much as kind of what the actual this year's values are. Is that correct?
Sure. I think one always is interested in kind of what the trends are as well as kind of where the market is at the current time. And so it gives us some information about, the general sense of the market now. Doesn't do much to really help us understand what any one individual farm is worth, but gives us a sense of what's happening in the market.
Yep. Okay. So what's the survey show for this year?
Yeah. So survey shows this year that farmland values are coming down, and that's probably not all that surprising to folks out there in the audience. And we had a rather large decline this year relative to what one typically finds in the farmland market. So, across the state, things were down 8 to 9%, if you wanted to use round numbers. And talking about trends, this would be a fairly large downward adjustment. You don't find many years where we get an adjustment of farmland value coming down by this amount.
So we're going to talk a little more detail about this here in a bit, but this is a pretty strong decline compared to some of the other. There's a recent USDA survey out there that shows not much decline in land values, right? We're going to come back and talk to that. So this
Right,
is
yes.
a pretty big adjustment compared to some of the other stuff
Right.
that's out there.
Yes, yes.
Yeah. Okay. So in the context of that longer term trend, this kind of tells an interesting story. Why don't you walk us through it?
So this is kind of the whole history of the Farmland Value Survey. Got started in the 1970s. And so the line on the bottom of this chart is what economists like to call nominal values, or they're the values that people talk about and report today. So if someone asked you what the farmland value was today, Mike would give them a number, and that would be a nominal value.
And this is what farmers actually have to write checks for the
Yep,
land.
yep,
Is that if
that's
they're
right,
buying it at
that's
the average
right.
value?
And you can see that there was in this chart, there was only a little bump in the 70s and 80s.
Yeah.
That little bump was much more severe than this appears in this chart. But and then after the 80s got over, we've had this long upward trend. And then towards the end of this, we got a rapid rise that occurred as the result of the strong demand for corn for ethanol and strong demand for soybeans for export to China primarily. Okay, and so, people are probably fairly familiar with that sort of history. The top line has been adjusted for inflation, and so all these numbers are in 2016 values, and so now the up and down in the 70s and 80s looks much more imposing here. And if you had bought land at the very peak in the 70s, in 78 or 9, you had to wait until about 2010 for it to get back there again in real values. And so, sometimes you have to have a long perspective in terms of buying and holding in order to get this investment to turn out to be a good investment. And we reached a peak in 2014, and we've had 2 down years now in 2015 and 16.
So you mentioned something, and Michael, we've kind of done some work in this space, which we may talk about a little bit later. But this whole idea of land as an investment, if one's kind of in the buying and selling mode, trying to outguess the market is kind of tough sometimes. But land as an investment has been a long-term, if you got a buy and hold strategy, is a pretty attractive investment. You have to worry a little bit about paying too much of it at certain times, like maybe buying it at the peak of the 80s or something, but it's a good investment in terms of its return as well as other characteristics.
It's analogous
right?
to a stock that you're going to hold for quite some time. It has 2 sources of income. One is the cash rent, which is like a dividend in the stock, and then your hopefully appreciation over time. Obviously, when you have a blip like we've seen the last couple of years, most people will hold the ground and hope that blip kind of goes away down the road. And so this is not something you get in and out of very quickly.
Yep. So those were the averages for Indiana, but it's pretty significant. This chart shows that not everything is average, right?
That's right. There's a distribution around the average here. So we break things down by region of the state here, and that's what's shown in this particular chart. And again, the theme across the vast majority of the state is that farmland values were down, and down significantly for the land market here. They seem to be down the most in the northern part of the state, and my suspicion is that this was influenced in part by the weather we had last year during the spring along certainly the western side of the state. And so they're down They're a bit more than they are on the eastern side of the state. But with the exception of the southeast, it's pretty clear that farmland values in the state are going downward.
Yep, yep. So, but that southeast piece there, averaged up. That's
Yeah.
a little bit of a surprise, maybe. Is that right?
I found that to be a large surprise,
Okay.
not just a little surprise.
Okay.
And I really don't have a good explanation for why those folks think the farmland values are as strong as they are down there in the southeast. Again, there may be some weather factors. Again, one needs to really think about the local conditions when it comes to the farmland market, because every area is a little bit different. Last year they were kind of in the other direction relative to the rest of the state, and so from time to time you get to areas of the state that shift differently than other areas.
And what about this issue of the difference between the different the quality lands? Is there any kind of trend there, or pardon me, is there a kind of general statement we ought to make there? Frequently we say that lower valued land typically kind of adjusts down faster, but is that the case in this case, or does it appear to be maybe?
While that is a common idea that's expressed in the market, our survey doesn't really indicate that that's the case. These values all tend to move together pretty much the same.
Yeah.
But you can see here that there are differences, of course, in the numbers that are reported here.
Right.
But the other thing you got to keep in mind is that there's a lot of variation
Right.
in these estimates, and we've never really sat down and did a test for significance across these three different land classes to say if statistically they're really different.
Yeah, yeah, okay, all right. So so you asked questions about, what are the major drivers here? So
Right.
so let's get some answers, get their sense of what is driving these changes.
Yeah, so this grew out of the fact that there are times in the land value history that it's really difficult to explain why land values are going up. So one year I decided I wasn't smart enough, and so I'd ask for some help here. So that's, and so, right now, this is for 3 years, 2014, 15, and 16, and it just kind of illustrates the kinds of changes that take place in these forces from time to time. So the first 4 items on the chart here have to do with either net incomes, revenues, outlook for prices, and that sort of thing. And they're have a significant negative effect. Okay, and that's certainly changed from 2014, where the bars were on top of the line rather than below the line. And kind of the last positive income item was livestock prices, and that turned negative this year. So income is a strong negative influence, and price outlooks are strong negative influences. But there are lots of positive things in the land market yet.
Good. Okay.
Interest rates are still important. Land is still viewed as an alternative investment that's attractive. Exports are, their influence is fairly weak right now. But the inflationary environment and the supply of land on the market are also, positive influences. Another one that's changed significantly that was talked a lot about when things were going up was the cash position of buyers. Went from a strong positive in 2014 to a slight negative this year.
Right.
And then the other thing that I always find somewhat surprising about this chart is that the influence of agricultural policy in terms of the way that people look at the land market now has kind of disappeared.
Yeah.
That used to be the item that provided the profit in farming, and was a strong influencer of farmland values, but that's kind of gone away at this point.
Yeah. So just a couple of things, Michael, I might kind of leverage out of here. We had a little conversation about interest rates and that type of thing. We're going to talk a little bit later about direction, but interest rates in terms of what they're doing, they seem to be still a pretty big driver of the positive side of this.
Yeah,
Lower
definitely.
interest rates, you get higher values.
Definitely, we'll talk about that a little bit later in this webinar. But certainly, interest rates have been relatively low the last few years, and a lot of people are expecting them to remain relatively low. And I think that's why it shows that they're very positive influences. I want to just say a couple things about a couple of these, and Craig's already talked to them, but I want to reiterate. The two big ones in my mind here are net income. You just look at the difference between 14 and 15 and 16.
Right.
I think that's explaining a lot of the decline in cash rents and land values, but also that cash situation is really interesting, Mike.
Right. Yeah.
We heard people saying that they were paying primarily cash for land.
Right.
From
Right.
2007 to 2013, maybe going into 14 even,
Right.
as this red bar would indicate. That's changed rather
Right.
dramatically,
Yes.
and so that's also putting a damper, I think,
Right.
on land on land values.
Right, right. So just a little bit of comparison here that you've got in terms of the market today compared to the past. Help us walk through this chart.
Yeah, so this chart, we have a question in the survey that has to do, we asked the respondents, is there more, the same, or less land on the market today than there was a year ago?
Right.
Because, one of the things that kind of happens in the farmland market is the supply of land that's on the market tends to kind of self-regulate. When
Right.
market goes down, people pull back, there's less land available on the market, and that's kind of what this shows for 3 years. Now, there's nothing particularly magic about any of these years. 1999 was was the first year that we included this question, and not too surprisingly, the category that wins this contest is the one of no change.
Yeah, yeah,
Okay, and
yeah.
so in the middle grouping there were 53% of the folks said there was no change in the amount of land that was on the market.
Yeah.
The 2011 year is on there for the reason that was the year where the more category has reached its highest point.
Yeah,
So
okay.
the highest that the number of respondents has ever gotten was 23% of them saying that there's more land on the market now than there was a year ago. And then the last one is now, okay?
yeah.
And so the more category is pretty small.
Pretty small.
The same category is, kind of what we might call average.
Right.
But the less category is significantly up.
Yep.
And so I think the land market has kind of held true to its history, that when things get tight, we just hold on to it.
Yep.
No reason to sell into a down market.
Yep, yep. And so if one kind of thinks about, and that 7.4, is that about as low as it's been, as you recall? From,
I think that's about as low as it's been.
yeah, during this period of time. So it's really, or during the
Right.
survey period. So it's really, really down there where the market seems to be. So realtors are probably kind of trying to figure out how to get some additional business
I
here.
would
Is that
suspect
right?
that could very well be the case, yes.
Okay, all right.
Mike, could you go back to the previous slide? We have a question on this previous slide.
Okay.
That came in here, and they were the question asked which of these factors is the primary drivers of land values. I can start by
Okay.
what I think it
Okay.
might be. I think the net income for cash rents and land values is extremely important.
Yeah.
I think the fact that we have very low interest rates is extremely important. So I would pick out those two, but I would also pick out a third, this cash.
Right.
The fact that we don't have as much working capital as we had as being, in my mind, probably the three most important drivers. I'm curious to think if you guys agree with that or have a little different list.
So, Craig, I'll let you.
I think my list would be pretty much the same.
Right.
I think right now we're in an environment where income and what people think the prospects of future price and cost relationships are going to be is just really, really critical.
Right.
If I were to add one to that list, Mike, it might be the supply. This adjustment of supply and demand is an important thing to keep an eye on in the land market.
Yeah. Some, for example, to your latter point, some would have at least suggested that some of the decline in land values in the 1980s was in some sense a function of the fact that certainly incomes were not where they were going to be and interest rates went up, right?
Yeah.
But
Right.
it may be overreacted because we had a fair amount of land that needed to
Yes.
clear the market through acquired property and bankruptcies and those type of things. Less bankruptcies, more acquired property on the part of the lenders
Right.
that just needed to be flushed through the market in
Yep.
times where
Yep.
there wasn't much appetite to buy this risky asset
Right.
on a fair number
Yeah,
of people.
people were really pessimistic.
Right,
And
right. And not unlike we saw in the housing market,
Yes.
you know, in recent times.
Right.
And that's one reason why at least some people,
Yeah.
Michael, are suggesting maybe this downturn adjustment, we're going to talk about in a second, maybe not quite as severe as the 1980s because we don't have that much property that's in the acquired property category or is expected to be because of the downturn.
No, I think that's exactly right. I
And
think
that-
1980s, the decline was accelerated because there was land on the market that wouldn't have been otherwise.
Right, right.
Because
Yep.
of financial distress.
Yep. And we're going to talk about this, but you raised this question of interest rates. We're going to talk about that when we talk about some of the price to earnings ratios and what interest rates have the role to do in terms of adjusting the market. But let's, so they did some forecasting.
yes, we like to get people to look at their crystal balls. And so with regards to land values, we asked them to tell us a couple of things. One is really a short term, what's going to happen in the last part of this year. And so that's the last column in the chart here. And, you know, our respondents indicate that downward adjustment isn't over. But in their estimation, compared to the first part of the year, it's going to slow down. But down is still the direction that
Right.
things are going to go.
Right.
And so, you know, if they're right, then we're going to see the market stay soft. And if you were to project this into the last, well, into the first half of next year, you know, we're talking about a 4%, 3 to 4% decline for next year
Right.
potentially,
Right.
which probably wouldn't be too surprising, I
Right.
suspect.
Particularly given what's happening to commodity prices and what we
Well,
saw earlier in terms of what
yeah,
they think is
yeah.
driving the market and the fact that maybe cash is not as readily available on the buying side and that type of thing.
Yeah, certainly right now the price outlook is fairly gloomy, especially for corn.
Right.
But, you know, we've got a bit of an offset there in that it appears yields are going to be really good this year.
Yeah, that's right.
You know, and I think good yields help people to see things a bit more positive.
Right, right. Yep. Okay. Okay. So we also asked some questions here in this survey about cash rents, and so should we take a look at some of those results here a little bit?
Sure, and the story's about the same, okay? Down, in this case, was the direction, and again, we had a decrease that was really a significant event in the cash rent market. Finding a 10% decline in cash rents historically is really unusual, and so again, we had a strong downward movement in cash rents. And again, I think it's probably not only a income phenomenon here or a margin phenomenon, but you know, and the difficult time we had with yields last year across much of the state, I think, had some strong influences here as well.
Yep. Yep. So again, kind of longer term history here in terms of how those values have gone up. And then we're going to talk a little bit in a second. I want to just ask you about the relationship between rents and land values
Yeah,
in
sure.
terms of the lag versus lead and that type of thing.
Yeah, so I guess the thing about this chart, I like to compare this to the land values chart because, you know, my view of the world is there's a strong positive correlation between these two markets. And, but this market over time has reacted a little bit different, and it's easiest to see that in the real numbers that are here. We had the boom and bust in the 70s and 80s, and then we had a fairly long period of time where rents went up about the rate of inflation. And so we get that top line's pretty flat across there until we get to the 2006 and 7 when things started to go up. And so that was a little different reaction than the farmland value market had in that period. You know, if you look at the nominal rates, you know, it went up, came down, and creep back up, but the rate of increase was much lower than in the farmland market.
Yeah. So Michael, is there any work that we've got that indicates anything whether land values and cash rents have a lead lag type of thing? Do they rents go up slower or faster than land values, or down slower or faster? Is there any evidence of that at all that we
It depends on the period. It really
Okay.
does,
Okay.
on whether they go up faster or slower. I think in this last turn, this last 10 years or so, it seems like cash rents went up a little bit slower
Right.
than land values
Right.
during this last period where we had an increase in cash rents. Another thing that's very important to keep in mind, and I get quite a few questions on this, is why don't cash rents adjust as much as net returns? Well, if you looked at a graph of net returns, they're highly variable.
Yeah,
And so
right.
you wouldn't expect cash rents to be as volatile
Right.
as net returns, and so quite often it takes several years of low net returns in order to get some adjustment downward in cash rents, and that's exactly what's happening
Yeah,
now.
but to Craig's point, this 10% reduction
It's
that we
very
saw
large.
is
It's
very
very
large.
large.
That's pretty
Yes.
atypical of this
Yes,
market.
you can get a 50% reduction, if not more, in net returns, but 10% historically would be extremely large reduction in cash rents.
Cash rents. Yep,
Definitely.
Yep. So again, differences across the state here.
Yeah, so we've got some differences in the size of the numbers, but they've all got a negative in front of them this time around. So it's pretty clear that cash rents are moving downward in this environment that we've got.
Right. You're right.
That's particularly true in the north, again, where weather was a big issue, but also west central, which I think was impacted by weather, particularly the northern part of west central last year. But the declines are particularly large in that region. You look at the west central, negative 14%. Again, anything over 10% decline is pretty large based on historical analysis.
Right. Asked again for what was thought was going to happen next year.
That's right. What's going to happen next year? And in this particular case, we asked, we got responses from people that said, well, they're going to be higher, they're going to be lower, and they're not going to change much. And so we put the respondents into those three categories. The people that say higher is a pretty lonely group.
Right. We're about 3%.
We've got 3% of the folks that said they were going to be higher, and their average increase was 8 to 9% here. Okay. No change was the second to largest group.
Right.
40%. The largest group was the fact that they were going to go lower again next year. That this trend is going to continue and down, another substantial amount next year, 8%.
I think it's important to remember who we're surveying here again. This would be people like appraisers, bankers, people that are very familiar with the land market. The reason I say that is in case people were watching our Ag Barometer webinar a week or two ago, farmers in general are much more optimistic, Mike, than this particular group, and so there is some differences in opinion, where land values and cash rents are heading.
Yep.
So let me, before we talk about the more longer term kind of perspectives, let me just kind of use these numbers to raise a question, and that is, we're not there yet, but we always worry and think about what's going to happen next year relative to negotiation of these rents. And what the notice date is in September, and so we kind of have to get that on our mind while we're out there running the combine. Okay, what are we going to do here? Well, any sense of how this is going to play out this next year based on these kind of sense? Some people I've heard say, there could be more churn in the market here on the rental market. More and more people who say, I just can't afford to pay the kind of rents I did in the past. And that's kind of what these numbers would suggest, is that next year is going to be, renters are going to go to their landowners and say, we just got to have another reduction, or if we didn't get one last year, we got to have a bigger reduction than we might have anticipated.
We certainly got to have one this year.
You got to have one this year, right?
Yeah.
So is that so we should anticipate some kind of tough negotiation out there?
I think that's right, Michael, that given the current economic environment that we're in, the cost-price relationships that exist, you know, we've got to find some way to get our costs back in line with what the market thinks the things that we're producing are worth. And so that's always a very difficult thing to do. So I think it's going to be probably another contentious year in terms of rental negotiation, with tenants certainly trying with some justification to get the rent to come down.
Yeah, I think if certainly if they didn't negotiate last year, they'll negotiate this year. You know, because if they didn't have a reduction last year, that's quite different than what the survey was showing. But I think regardless, I think there's still quite a bit of downward pressure on cash rents. You know, when I look at my models, I think maybe a 5% adjustment or something slightly smaller than that would be in order.
Right. So we've got some things, Michael, on the website for the center on negotiating rents and options, thinking about rents and flexible cash rents and that type of thing. We've got a spreadsheet out there. You might want to comment.
Yeah, we have
on
a spreadsheet that looks at 5 years of crop prices, five years of yield projections, and combines that with a budget, and then looks at cash rent in relationship to working capital. And what that spreadsheet is suggesting is our cost of production right now needs to be adjusted downward. We need to lower our costs. Cash rent's only part of the picture, but it's an important part of the picture, and that's where I'm coming up with my 5% is using that spreadsheet and some other models.
Yep. So we've talked about the Indiana survey here. Let's Michael, just look at how that compares to some of the other work that's been done in other states, so we can put it in that kind of.
Let me make sure everybody understands what I've got here. I've got the starting date here for Iowa, Illinois, and Indiana is when the decline started, according to the state surveys. This is not based on USDA data. This is based on state surveys, and so the Indiana is based on the land value survey we've been talking about here, and so that's important to point out. But you know, given the start dates, cash rents have declined. You know, 15% in Iowa, 12% even in Illinois. We don't have the 16 data there yet, and 12% in Indiana. So very consistent across those three states. What's a little different here, Mike, is land values declined harder. You know, and faster in Iowa than Illinois and Indiana, and particularly Indiana. So Iowa's been even though they're extremely correlated, cash rents and land values across these states. You know, Iowa went up a little faster and is coming down a little faster in terms of land values in these other two states.
So does that suggest maybe that we watch Iowa and see what happens there? They may be a bellwether in terms of what the kind of adjustment process. They seem to move up faster. They seem
I would strongly
declining.
recommend watching Iowa very closely, even if you live in the Eastern Corn Belt. Because they do seem to be kind of the bellwether of what's going on with land values.
Okay. Now, the other thing we mentioned earlier, we ought to just come back to, USDA has released some numbers on what's happening, and their numbers, Craig, show not much decline in values. So we ought to kind of talk about that. The numbers we have, the numbers from the other states in the Midwest suggest more significant declines in land values than the USDA numbers show. You want to talk about that?
Well, I think that finding differences isn't all that surprising. Especially when the market is going through a transition, because the time at which you do one of these surveys can have a lot of influence on what you find. I mean, if one looks at our survey, the changes between December of 15 and the first of the year, if there were declines, they were much smaller declines. I think some of them were even increasing yet at that time, but they've fallen since after the first of the year. So when you take your sample, matters, and so all of these are done at different times. So that's one possible explanation for this. And another thing I think to keep in mind is that when you get estimates back, there is a lot of variability in these estimates, and so I think one needs to be cautious about that. And then the other thing that one needs to, I think, keep in mind is that these surveys give you information about what's happening in the general market here, and not what is happening in any one local market or what your farm may be worth out there
Right.
in the country.
Right, right. So in that context, we've had the Federal Reserve has also come up with some projections
Yep.
based on some recent surveys of what's been happening. I think, Michael,
Yeah.
the Federal Reserve numbers
They're closer to what we're showing
closer
here.
to ours rather than the USDA
Definitely.
numbers.
If you look
right?
at Federal Reserve Bank of Chicago,
Right.
that would cover Iowa, Illinois, and Indiana.
Right.
Not all
Right.
of Illinois and Indiana,
Right.
but
Right.
large proportions of those two states. They would closely track what we're showing here.
Right.
Another thing, that real value of these state surveys, of course I would like the state survey because we're talking about one of them here, but one of the real values of the state surveys, in case of people out there have a tendency to look at USDA numbers or the Federal Reserve Bank numbers more than the state surveys, is the state surveys do a good job of looking at different land qualities. Quite often USDA and also Federal Reserve Bank surveys, to a large extent, they're looking at maybe average quality.
Right.
The state surveys, at least these three that are represented in this particular slide, do a good job of looking at poor, average, and high quality ground.
Right, right. So show the differentiation.
Yes.
Back to your point that
Right.
it's local conditions, the quality of the land, a number of things could be major explanatory variables in terms of driving a particular piece of property and or driving survey results. Right.
Yes. Yep.
And these are those were based on averages,
Yep,
those
yep,
percentages.
yep. So let's turn our attention to the long term here just a second in terms of, okay, this is kind of history and where people think we're going to be or where the survey respondents thought we're going to be here next year. What about going out there longer? I mean, let's kind of see if we can ask the question, are we in for another bust like we were in the 1980s? I mean, that's the kind of question I get out there a lot of times. So let's get a little bit of deeper dive on what's going on and where things might be. So Michael, here's the kind of stuff that that we've been talking about in terms of what we ought to be watching to figure out where the direction might be. Will this land value and cash rents turn around real quick?
Notice there that I've labeled this possible pressures, and so
Right.
not all of these are currently pressures, but let's look at some key factors here. Cash rents are heavily driven by the low earnings for corn and soybeans, and so that's why we're talking about cash rents perhaps declining in 2017 and continue to decline after that. Land values have probably more factors that are relevant right now. Cash rents declining. I think there's been an increase in the risk premium for the farming sector, Mike, because there's a little more risk in the farming sector today than perhaps there was a few years ago when prices were higher. And then we have this relatively high P-rent ratio that may or may not have some downward pressure. But I think that the two factors here that are somewhat contentious. What's going to happen to long-term interest rates and what's going to happen to inflation?
Yeah,
In fact,
I noticed you skipped over those.
We had a question here related to interest rates, and when I look at people that know more about long-term interest rates than I do, most people are thinking that interest rates might increase a little bit, but not very much, and not very soon.
Yeah,
And
yeah.
so I think the market is really counting on these low interest rates continuing for a while.
Yeah,
I think
yeah.
that's bid into our land values. The question was, what would happen if that changed? Well, I think it's obvious. If interest rates went up, we'd see larger declines in land values.
Yeah, and that's not unrelated to this.
Yes.
Boy, this looks to me like some academic kind of got all of a sudden on the slide here and put something in. But this is basically the valuation model that
Yes.
people use to think about
Yeah.
these types of things. And notice you've got there that capitalization rate down there, interest rate and risk premium.
Yeah.
If in this simple mathematical equation, if that were to go up, that could have a
Yes.
fairly big. Some people say land is really kind of like a real bond rather than a financial bond. And what happens to the value of any asset that generates income over time is that if the interest rates go up, that means that the value of the asset goes down. I mean, that's just life. That's just the real world. It's proven every minute of the day in the financial markets, and it's not as quite as short of impact in the real markets, i.e. land, but it still is a relevant part of the conversation. But the question I want to go back to here is this issue you said of, we've been predicting for a long term that interest rates are going to go up, and we've been wrong for a long time. What's going on here? How come this
the
has
Federal Reserve
happened?
Bank, some of the experts in the Federal Reserve Bank system have been predicting interest rates are going to go up. I think what they were counting on is the economy being stronger.
Aha.
the economy remains relatively weak,
Right.
not only in the U.S., but in other parts of the world. And as long as that's the case, I don't think there's going to be that much upward pressure in interest rates. That's the way I read the tea leaves.
Yep.
Yeah,
Craig?
and I agree that I think we're in a slower growth environment in terms of not only our national economy, but potentially the world
Global,
economy.
right.
And so there isn't going to be in this environment the upward pressure on interest rates that we would find in other periods of time. I had a recent conversation with a financial planner, and he kept referring to 2% growth in the U.S. economy as strong growth. And I told him I had a difficult time being able to reconcile the 2% and strong as in the same sentence. And I think that that's the environment that we're in.
Right. That's right. That's the real world today.
That at least in the minds of some people,
Yep.
strong growth
Yep.
has changed from 4 to 5 to 2.
That's right. That's right. And so, to your point, and the global growth rate has also been continually by International Monetary Fund and other World Bank been projected to be slower, and they keep revising their numbers down, right? And so, actually, maybe to your point, the real problem is that we were not so much in error in predicting interest rates. We've, as economists, had the error in terms of predicting what was going to happen to global growth.
Yes.
We thought we were going to go back to global growth of 3, 4, 5%, and we haven't. We're at 2 in the U.S., we're at less than 3 in the world, and substantially lower, and therefore interest rates, because of that, are going to be kept low until we can kind of get that growth rate to be moving up a little bit. Well, that's not unrelated to this chart, which we frequently, Michael, try to use to kind of think about in the stock market what the value of an asset is in terms of the PE ratio, and we do the same thing in the land market. So help people understand this chart.
I think the three of us would agree that that the current land value to income multiplier, sometimes called the P-rent ratio, is relatively high today. But I think we also agree that there's a reason for that, and that's related to low interest rates. Certainly, if interest rates were to increase, I think that we would need an adjustment to the land value to income multiplier, and we'd see land values declining faster than cash rents.
Yep. So
that's the way I think it would adjust.
Yeah. So sometimes we talk about an academic term called reversion to the mean, that we're going to go back to normal. Normal in this case being 20, or to the average 20. And what I hear you saying, Michael, is that as long as interest rates stay at their current low level, and expectations are they're going to continue to stay at that level, that we probably aren't going to have this ratio adjust back down to that average of the last 20 years or whatever type of thing.
I think it's going to be a long time before we revert to the mean in interest rates, and so
therefore
we're not going to we're not going to go back to that 20 ratio anytime soon.
Yep. And I see you shaking your head on that, Craig.
I think that's right. I think the story of this picture is one of interest rates. If you go back to the 80s, long-term interest rates were double-digit in size, and we went through the period there in the 80s where this multiplier did come down, and I think a large part of the reason it did come down was because of the high interest rates going up. We hit the bottom in '86 or thereabout, and since then, interest rates have been going down. So most of us have lived our professional career in an environment where all we've known is interest rates declining.
That's right.
And this multiplier going up. And I think we're shifting from that environment. We're not going to see more declines in interest rates. We're going to go flat or up.
Right. So we had a conversation about the drivers and that type of thing. You actually asked, I think, in your survey results what we thought was going to happen to rates of inflation as well as interest rates and those types of things for prices. So let's talk about that.
Okay. So we've switched to long term here, and let's be clear about what long term is for us. It's thinking about things 5 years
5
from
years.
now. Again, so this may not be all that long in terms of what some people think of as long term. But we ask our respondents to estimate for us what they think corn and soybean prices are going to be. So, you know, you can kind of see the pattern that things have gone through. There's been, you know, a significant reduction certainly in what people expect long-term corn prices to be. We're down around $4 a bushel now, where back in 2011 we were getting close to $6.
So let's make sure these are their expectations in the
That's
survey
right.
results
That's right.
that they came up with, not what
That's
the
right.
actual prices were.
Not what the actual ones are.
This is their expectations.
We're trying to get at what people think the future is going to hold. And the reason for that is that I have the view, at least, that the farmland market is driven strongly by what people expect to unfold
Right.
in the future, because that's when they're going to be
Right.
paying off the debt they generally incur when they make a farmland purchase.
So let's put interest and inflation on there, and looks to me like we get some additional insight in terms of the future that you might want to talk about.
Yeah, so interest is the top line here, and you know, I think it looks to me like it's pretty obvious that our respondents think low interest rates are going to hang around for another 5 years at least.
Yep.
And so there doesn't seem to be anything there that would cause farmland values to drop significantly. And again, inflation expectations have been slowly declining, you know, for a number of years, and no one. I think that the concern we had when the Federal Reserve decided to try to stimulate the economy with all the money they dumped into the market, that we would soon have fairly high rates of inflation because there was all this money that was going to be chasing too few goods.
Right.
Well, the money never started the chase.
That's right. That's
It
right.
just sits there,
Sits there.
and still sitting there.
Yeah,
And so I think, you know, this would indicate that that worry has kind of subsided now.
Yeah.
Maybe we're wrong at the wrong, we've changed our minds at the wrong time, but
Yeah.
that's where we're at.
Well, on this interest rate thing, it's really interesting that about a third of the debt of governments around the world now has negative interest rates.
Yes.
Negative interest rates. Michael, we used to negative interest rates. That couldn't be. We got a different world now. When you've got negative interest rates and there doesn't seem to be much stimulative impact of those negative interest rates. In fact, people seem to be saying, whoops, that says we've got more problems. Maybe we need to not spend more, but save more, right? Or not borrow more, but save more. We've got a very different business climate going forward, right?
Obviously,
Michael?
that's a response to the very slow growth. The governments are trying to do everything they can to stimulate economies, and even that's, you know, finding even with negative interest rates, they're finding it difficult to stimulate growth, and so that's problematic. We did have a question, kind of reverse of what we've been talking about, is what would it take for land values to go up? And I want to qualify that by looking at this graph, because I think this graph is very helpful. You look at 2016, we're looking at about $4 corn and $10 soybeans. I think if we're going to have some growth in land values, you know, in 17 and 18, for example, but let's don't talk longer term. Let's talk the next couple of years. I think prices would have to be higher than what they're expected here.
Right.
I think that would be one of the key things, is to get us above break even. I think we'd have to get above break even in crop returns for there to be some upward pressure in land values. I think that's one of the things that would have to happen.
Yeah, well, although, what about so back to positive margins?
Yes.
Is what you're talking about. Couldn't it occur on the cost side? What about if we get costs going down?
Yeah, the positive
dramatically?
margins could take place from higher prices, or there could be faster adjustments to cost than we're thinking about.
Right,
You know, costs have adjusted quite a bit in the last 2-3 years, but as we indicated earlier, there's more adjustment needed.
Right.
Maybe there's some costs that will adjust more than we anticipate.
Yeah.
That would certainly create a better margin situation, would put upward pressure on land values.
But
so I think that's the key thing to look at in my mind is we've been talking a lot about interest rates, but we all agree that interest rates probably aren't moving very rapidly here. I think the key thing to look at is this net returns. What does the crop net returns look like?
Yep.
Yeah, I think that the net returns is a very important thing in this current environment, certainly. And you know, as I think about, okay, what might cause net returns to improve, I think one thing that would help them improve is a supply disruption. And, you know, we face that every year, you know, because, you know, we could have a drought again.
That's right.
Those
Just
sorts
not
of
on my
things.
farm.
We would hope it's not on your farm,
That's
Michael.
right.
But
That's right. And every farmer watching says not on my farm,
that's
just
right.
someplace
Yeah,
else.
we don't have much control over
That's
where
right.
or how
That's
severe.
right. Yep.
But you know, getting supplies reduced
Right.
would help the price, which would help the margins certainly. But other than a supply disruption, I don't see much out there that would cause farmland values to go up.
Yep.
And I think we're going to have a period of time where we have more than just one positive year. You know, one positive year might stop the decline,
Right.
but it probably won't lead to an increase. I think there's got to be a period of time when people really are convinced that we're in an environment where we're going to see much more positive returns.
Right. So you actually kind of asked the participants to look a little long term on this value thing. So kind of these things, these numbers kind of reinforce what you just said. Isn't that right?
Yeah, I think that's right. And so again, we asked them where's farmland values going to be over in 5 years from now. Okay, and again, we get our 3 buckets. They're going to be higher. There's going to be no change, and there's going to be a decrease. And so you can kind of see here how people sort it out. And in this particular case, there is no sense of agreement about where things are going to be. We're pretty well evenly split, about a third in each category. And so we got, you know, 35% that think things are going to be better and farmland values are going to be higher in 5 years, but only 7 to 8% higher in 5 years, which if you look at the changes in the farmland market over a 5-year period, that's a pretty small number.
On an annual basis, that's about one.
Yeah, it's about 1% a year.
Yeah.
So yeah, I mean, this is a really small
Right.
and a much different environment than we're accustomed to.
Yeah.
On the decrease side, people think that farmland values are going to be down another 9–10%.
Right.
And I guess that, yeah, and again, so that's not spread over 5 years, not a large decline every year, but signals down. So if you put all this stuff together, we get an overall decline of 1% in 5 years from now, which is, you know, we're talking about flat.
Right. Talking about flat. That's right. We're talking about flat. So maybe just to kind of close things off, just a little bit of a synopsis here where we've been. So Craig, you want to kind of summarize this for us? And then
Yeah,
we'll
so I
have
guess this was kind of my set of takeaways here. I think, you know, the farmland market in Indiana and the Midwest here, I think, has kind of has turned. And we're declining now rather than increasing. And if one looks at what people thought about what is likely to happen into the future, I think what they're telling us is that there are more declines in store unless we get some unexpected event that happens. And so, you know, I think at this point, the die's kind of been cast for a bit of a downward trend in the farmland market. And that's true, I think, of cash rents as well. We had a significant reduction this year. And, you know, my crystal ball, as I look at 2017, is that these rents are going to need to come down more as we try to get our cost of production back down below the market price. And let's see. So, you know, the value to income multiple that we're looking at, you know, it's high. There's no doubt about that. It's the highest it's ever been, at least in our survey. And I expect that it's going to continue to be high here. But, you know, one, I think, shouldn't get, well, too depressed about what's happened in the farmland market here recently, there are certainly still some strengths in this market. It's just that right now we've got a really severe income issue. Interest rates are still quite favorable. Farmland is still viewed as a good investment, and there are managers of large portfolios that are still trying to find ways to get into the farmland market to help them balance their portfolios of equities and bonds and that sort of stuff. The amount of land that's being brought to the market is still pretty much in balance. We don't have an excess supply, so we're not getting downward pressure from the supply side, and inflation seems to be favorable. The but is the last one here.
Right.
But there are problems with incomes,
Right.
commodity prices, and the cash position of farmers. What used to be a safe and secure position from a cash perspective, has eroded pretty quickly.
Right.
And so that is of concern as well. So we're in a little different environment now than we have been. And we'll get through it without too much trouble, hopefully.
Yep.
But it's going to take a while.
So in that context, Michael and Craig, I sense that you're both saying, we're in a downturn, we're in a reset, but we're not into a 1980s phenomena with that 50% decline in land values, for example, not anticipating that kind of an adjustment process. And furthermore, on top of this, most farmers are much better strongly positioned than they were in the 1980s, and so not a lot of property that has to go through a market that from acquired property that doesn't want to absorb it. So
at least at the present time,
Yeah,
and hopefully
right.
it'll stay that way. But
Yeah.
having said that, I don't want to be too much of a bear here, but I do think there is a possibility for another 10%
Okay.
reduction in cash rent and land values.
Okay,
And
okay.
I say that because margins are not very good this year, even with the above average yields.
Right.
And they don't look like they're going to be very good in 17 and perhaps even into 18. And
Yep.
so, given that the margins are going to stay low for a while, I think there's some risk that we're going to see further declines in the cash rent and land values. Will that occur like this year, all in 1 year? I don't think so.
Right.
I think
Right.
that'll if it does drop 10%, it'll be spread over 2-3 years.
Yep. Okay. So Michael, there's some additional information here. If they want more detail, there's a Purdue Agricultural
Yes.
Economics report that's got your survey results, Craig, in the report.
And it has more detailed information about trends in Iowa, Illinois, and Indiana.
Right,
And so
right.
you want to know a little bit more about those trends and P rent ratios
Right.
in the different states. Please take a look at that recent PAR publication.
Right. Okay. Before we go close off here, two things. One is you do have, I think, another webinar coming up. But do we have any other questions, Michael, at this point?
We
that
had
need
one
to answer?
question, Craig, that we may want to answer here before we end, and I don't know the answer to this, and so
So you're giving it to me.
and I know you do. They said it's on the cash rent in particular. Is it from an owner or tenant perspective? My guess is both. You know, in terms of who are we surveying to get the cash rent information. Can you talk a little bit more about that?
Oh, yeah. So in terms of who we're surveying, are the group that I mentioned at the beginning. We've surveyed people that are in this market as part of their professional career. So that does include some farmers. Okay. It includes bankers of all stripes, farm credit, commercial banks, what have you. It includes professional managers. And it includes rural appraisers.
So it certainly wouldn't be either geared more towards owners or more geared toward tenants.
Yeah, and I would say that the mix of these folks is reasonably balanced.
Yeah.
That it's not dominated by any one of those groups.
Okay. Yeah, that's good clarification.
Good.
There was a question
Super.
related to
Great.
that.
Great.
But Mike, we do have an upcoming webinar. It's a completely different topic than what we're talking about today, but this one starts at a little different time. It's next Tuesday at 10 a.m. Eastern Time. But it's going to be myself and Denise Schroeder from White County talking about putting a value on sweat equity in the farm business. And so if that's something you're interested in, please join us for that webinar.
Okay, very good. Well, thank you for being with us. I want to thank Craig Dobbins for his work that he's done. He's been doing this for a number of years, and it's always something we always look forward to, Craig, in terms of getting those results. Michael, thank you very much for the opportunity to participate in helping with some of the rent to value ratio and that type of thing. Thank you for participating, and come back again August 23rd for the next webinar.